Hey, good morning, everyone. Welcome to the Macro Snapshot. We are Friday, February the 27th, 2026. Fairly quiet session overnight, not a huge amount of news to change markets, but particularly what I want to quickly have a look at just to start off with just the situation of oil. Uh, we're going into the weekend. Who knows if there's going to be sort of an attack by the Americans on Iran. The basic situation is that there was a little bit of relative sort of progress, relative optimism yesterday, sort of expressed by the Omani foreign minister, who's kind of mediating the talks in Geneva. But there's in theory the discussions are ongoing. There's got to be a technical discussion next week, Monday, Tuesday. But the point is that on the big picture, there are still differences. Point is, no one exactly knows. One could say cautious optimism, but certainly there seem to be a major sort of ideological and sort of structural gaps remaining between the Iranians and the Americans. So what does that mean? That means that there's still a bit of geopolitical risk globally, just sort of at the periphery being priced in. And we see the very good performance of US Treasuries yesterday. Acting as a traditional safe haven. But also kind of what's interesting here, if we look at the oil price, you see that oil yesterday, fairly choppy. This is the daily chart. You see how choppy it was, just sort of bouncing up and down on sort of headlines coming out of Geneva. But we can see that overnight oil, it's bounced off a sort of an intermediate low and it's pushing higher. So at this point, you've got to say that going into the weekend, it looks as though, oil desks are kind of sort of hedging upside exposure here in case there's any sort of hostilities. I think that, if hostilities do not break out, if there are no attacks, if the attacks are purely, if they come indeed, and if they're purely sort of theatrical and performative in nature rather than, sort of a genuine attempt to sort of destroy the Iranian military or regime change, I think it's going to be, we probably won't get a massive upside. And of course, if there's no attacks, I think, maybe we might peak out here at 68.50. So the point is that oil at the moment, being sort of relatively supported, and then that's going to depend a lot on the headlines. So let's just see what happens over the course of the next, I guess, sort of 72 hours. Just going to grab some tea here. All right. In terms of other stuff, what we do have, we do have. Actually, just talking about risk and whatnot, I just want to look at the US Treasury. So the US Treasuries, if you look at the yields here, so this is not the price on the yields, you can see here that all across the curve, if you look at the 2-year here, the yield even overnight, we had yesterday the yield going down and going down further. So we're getting towards the bottommost limits here. And I wonder if the 2-year, for example, can go too much more below this sort of 3.4% here. That could be an interesting sort of a top out level there in terms of the price. You look at the 5-year also getting down towards sort of the lower end of its range, down at 3.53, something like that. And then what's kind of interesting, look at the 10-year now at 4%, or actually below 4%, 3.98. So the 10-year really sort of, look at these yields sort of collapsing, and also out of the 30 years. So the 30-year also at a pretty interesting sort of level here, which could be, we might get some dip sellers or some people coming in to sort of sell that rally at the top here around about these lows here at about 4.63. So basically, I think the market is essentially not overly concerned by sort of inflation at this point. And obviously yesterday we had some very choppy action and some very weak action in certain sections of the equities. Had a big sell-off in certain sections of the equities, Nvidia and whatnot. So the bonds, interestingly, sort of reverting to their traditional role as a safe haven. We've got, as I said, a bit of geopolitical risk maybe in Iran. But I think that it is interesting if we look at some of these yield levels that, let's say, for example, the 30 around about 4.634 here. I think, there could be a little bit of resistance there, and a 10-year at, now under 4%. I think there's going to be less and less buyers coming in, and, somewhere around here, maybe another couple of basis points, there could be some sort of selling on that, or at least less buying. I think that's going to stabilize around here, and we could get a bit of a reactive bounce just because that's probably reaching at the limits, because there is still relatively sticky inflation, and the US economy does seem to be doing okay. Let's just put it that way. Now, talking about the US economy, we do get some PPI. We had strong initial jobless claims yesterday. So again, just keeping an eye on that. I know there's a lot of stuff going on in AI and Iran and everything like that. But the reality is that the US economy does seem to continue to be chugging along. We had initial jobless claims yesterday, which came in, indicating that the market is maybe not hiring a huge amount of workers, but the underlying strength of the labor market is still there. Now, the big question is this going to be something which will change over the next 12, 18, 24 months with AI? There's been a lot of sort of doomsayers out there. We had the famous sort of Citrini report coming out a few days ago. But guys, let's keep this in mind. This is written by a 33-year-old who has sort of a Substack, who, as far as I can see, is what I'm trying to say. Now, I'm not saying that from that reason. I'm simply saying nothing wrong with being 33 and having a Substack. But the point is, this was written sort of in an effort. It was like a what if scenario with his partner. It was kind of an extreme scenario. And let's not assume that there's going to be 10% unemployment in 12 months because Citrini research said it, which is one person actually. It was written with his partner. A couple of people who are trying to just sort of present a certain sort of very pessimistic scenario. And keep in mind that someone like me, I lived through sort of computers becoming sort of everyday adoption and whatnot, and it didn't cause massive unemployment. We also had, electricity came in and it didn't bring massive unemployment, et cetera, et cetera. The point is that technological innovation, there's always been a lot of doomsayers. And I'm not convinced that, sort of we're going to have 15 or 20% unemployment because of AI. Will it cause disruption? Absolutely. Anyway, enough of the ranting. Simply to say that let's see how this all plays out, and we'll see if markets stabilize. What I would point out, though, just in the equity space, obviously a lot of interesting stuff. Let's look at a few of these sort of equity markets. And you can see here that if we look here, let's say the ES, by the way, I just first of all like to say that the VIX is got pretty elevated yesterday up to, almost like 21 or so. It's still elevated. You can see it went down during the course of the day. We had a bit of a bounce, but overnight the VIX has come up. So the point is over in 20s here, this is still relatively elevated. So we can expect a little bit more sort of choppiness and volatility. It's also the end of the month today. So there could be, who knows, all kinds of rebalancing and whatnot. But just from a technical perspective here, for sure, this is disappointing price action. Clearly, this is a rounding kind of top. We've been unable to reach a new high for about a month or so. And basically, there's not a lot of conviction here. But that, it doesn't mean that certain sectors are not doing well and certain sectors obviously are underperforming. So let's just look from a technical perspective, put this on a 4-hour chart. I would say just from a sort of a technical perspective here on the ES, for sure, this is disappointing price action. But if we actually look here and let's just see on the shorter term fib here, maybe the next sort of hurdles here. The bears so far have pushed it down to the 61.8% fib retracement. This is pretty critical because we're now trading underneath that. And I would say that we need to get a bounce today above this sort of 68.88 level on the ES. The bulls need to come in here right now this morning and sort of push this higher. We have the PPI data. Is that going to sort of show continuing sort of inflation problems? That's expected to come in month over month, both for the headline and the core at 0.3. That's still quite elevated. If you annualize that, we're well over 3%. If you have a 0.3 month over month, annualize that works out to over 3%. So the point is here is that the Fed is not necessarily cutting anytime soon. And I get it. We have wash coming in and et cetera, et cetera. But the point is that we still have creeping inflation. Inflation is still a little bit sticky. Do we care? Obviously, the headlines are not really on that at the moment. But behind the scenes, the Fed is looking at that. And I would have to say, they're not anxious to cut sort of aggressively, at least maybe for the next 2 or 3 meetings, let's say the next 2 meetings. So the point is, if we get an aggressive inflation print today from the PPI, is that going to confirm the CPI, which is being sort of too sticky for the Fed's liking? And if we get that, we could definitely see a downside flush because, as I say, the bulls need to come in at this level here. If we look over at the NASDAQ on the 4-hour chart, even weaker price action here, you can see some of these moving averages. This is the 4-hour is kind of starting to roll over a little bit, definitely starting to point downwards. Again, if we look just like in a basic fib here on the 4-hour, you can see that well below the 61.8 fib retracement here. So, the bottom line here is that the bulls are under pressure. The bears sort of are taking the ball, so to speak, to use a football analogy. And it does seem to me that what we could expect today, at least from a technical perspective, is potentially a bit more sort of probing to the downside. And obviously, this level down here at 24,000, about 700 on the Nasdaq is key. Now, if we look actually just at some of the sort of subcomponents, let's just look into some of these individual equity sort of stories. So if we look yesterday at the equal weight, we can see the equal weight. Look at this equal weight. So value seems to be doing better than sort of momentum or growth at this point. And we can see that sort of the equal weight, the RSP, actually almost at all-time high. So definitely sort of massive rotation going, like people are selling certain stocks and buying other stocks. And one of the beneficiaries here is the equal weight, which trades almost above its highest. Now, what about the Mag Sevens? Obviously, we had a nasty day yesterday for Nvidia and some of the software companies like Microsoft have been under a lot of pressure. So again, trying to pull itself off the 200-day moving average, but essentially weak price action at this point. Now, the semiconductors, now this is interesting because the semiconductors, which have been sort of the leading general, so to speak, reaching new highs as recently as Wednesday, a couple of days ago, they had a bit of a down day. Obviously, Nvidia's underperformance or weakness was part of that. So this is going to be critical here to see if the semiconductors can pick themselves up and sort of push a little bit higher today? Or is this beginning of a sort of a structural rotation where we start to get, semiconductors, people starting to take profits? We've seen that over in Korea, things like the Kospi are going ballistic, the Samsung, SK Hynix, SanDisk, all of these sort of makers of sort of memory cards, random access memory, DRAM, DRAM, all of these kind of companies have been going hyperbolic and the hype, we'll see if maybe, people are going to start taking profits and saying, okay, the party's over. If that's the case, we could see, more money coming out of, let's say, the semiconductors, profit taking and going into sort of things like, sort of value and small caps and equal weight and stuff like that. Now, if that's the case, what about our friend IGV? Now, as I was saying a couple of days ago, this is extremely shorted. And it's ripe for a short squeeze. It's the most shorted kind of basket, and you can see also the technical level, the quadruple bottom. So what's going to happen? This is pretty obvious, like a bit of a short squeeze and some dip buys coming in here, and maybe again sort of rotation. Have we reached peak fear about software as a service being sort of destroyed, and the Citrini report and all this kind of stuff? And maybe the narrative's like, okay, guys, we get it, but these are still companies which are generating cash. And what I said yesterday, remember I was saying in the video yesterday that the gap between the actual earnings forecast, the EPS projections, which is upwards and strong compared to the performance of the stock prices for all of these software companies, it's the most it's been for a long time. So the point is that the narrative is just getting extremely sort of oversold, so to speak, and compared to actually what these companies are doing, these companies are still making money. Now, of course, can there be a lot of sort of changes in the next 2 years? Of course, but just to say in the short term, ripe for a little bounce. So it could be, that's going to be definitely what my attention is going to be on today, is will this sort of bounce in IGV and the relative underperformance here of the semiconductors, is that going to be is that going to continue? Okay, so getting on to some of the individual stocks, obviously there's been all kinds of stories. I mean, we had Anthropic, which is in pre-IPO kind of mode. Very, very interesting. Basically, the US military wanted to have sort of unlimited use of Claude and sort of their sort of artificial intelligence platform. And Anthropic basically said, no, we want to push back against sort of unmanned weaponry and sort of unlimited sort of usage, which could be used to, for surveillance against the US population. Obviously, that's already happening. But it's just interesting that symbolically, the Department of Defense said, hey, Anthropic, we'll maybe go to, OpenAI or other sort of providers of AI. So the interesting, sort of social tensions, and Anthropic, which is not a publicly listed company at this point, they're able to sort of take that stand. But we're now getting into some interesting sort of battles here between sort of institutional use, government use, Department of Defensive usage, and some of the companies. So let's keep an eye on that story. But probably the big story, we also saw like XYZ, so Block, Jack Dorsey, and again, this is part of the story. They announced layoffs of about 40% of their staff. So just a little bit of perspective here is that let's have a look here, going onto the daily chart here. So this is a company which, A, is under pressure. I mean, just let's have a little bit of perspective here. You can see that Block has lost a lot of its value up, around after COVID, up to, almost $300, now trading in the mid 50s. And so the fact that they came out and said, "Oh, AI is going to sort of get rid of all the white collar jobs and do our coding and development of software and everything." Okay, absolutely, that's a possibility. But keep in mind, this is a company which is looking for an excuse to kind of shed some of its workforce. And I just want to give you a bit of perspective here on some of the the dueling narratives here. One narrative could be AI is coming, it's going to wipe out sort of the cognitive in industry. So any industry which was built on sort of cognitive skill, cognitive knowledge is going to be wiped out or severely reduced. Is that true? I absolutely believe that is true to some extent. Whether, as I said, it's true to 100%, I don't know. But let's just keep in mind some of the narratives. And I just want to point out different ways of looking at this. There's someone, just on Twitter was saying, hey, all they're doing is going back to pre-COVID levels at Block. And you can see here that, they used to have 3, 4, 5,000 workers. Now they ballooned up to 12,000. So all they're doing is getting rid of a bit of a bloat. So what you could say is, this particular guy is saying, hey, Jack's stupidity in headcount over the years. So it's just saying, this hasn't been a disciplined company. They're completely bloated. Okay, they're getting rid of some of the excess. Don't worry about it. And another way of looking at that is to go, oh my God, 4,000 workers, white collar workers are being destroyed. The middle class economy is being destroyed. But as someone I follow, a Guy Berger, who's an expert on the employment numbers. By the way, if you're interested in employment data, this is a guy definitely to follow. And it was just interesting. He put some perspective and said, hey, in a very low layoff environment, the US experiences 4,000 layoffs, the Block number, roughly every 1 hour and 40 minutes. Okay, so the question is this a harbinger at Block of the doom and that all AI is going to take every single sort of job in the cognitive industries? Or is it just a bloated, ill-disciplined company, which essentially the CEO was looking for an excuse to get rid of, 30, 40% of the workforce. And in the context of the overall US economy, it's no big deal. I don't know. It's interesting. What I do know is that other CEOs, of course, will be looking at the fact that Block's sort of share price is up, I think, 20% post-market or pre-market. And so are we going to see this? For sure. I think it's also it's going to be very tempting to CEOs to start getting rid of its people, and that for sure they're going to be looking at ways of cutting sort of people. And can we see the unemployment rate go up and the Fed cutting more aggressively? Absolutely. So there's Block pre-market doing very, very well, of course. Okay, other companies. Let's just have a quick look at NVIDIA and see where we're at. Very disappointing price action. I won't go on about it too much. I think everyone's probably followed that story. But just from a technical perspective here, interesting. It was looking good. So it bounced off the 200-day moving average, had a beautiful fib retrace, and was looking good to break out and test the highs and maybe have a Fibonacci extension above these recent highs. Of course, it failed miserably at the 61.8 fib level, this key level here at 196. We all know what happened. The market was underwhelmed by their not so much the earnings, but just the general sense that they might have supply chain issues, that there's more competition happening, that they've sort of overcommitted to a lot of spending themselves, and that eventually this massive sort of hyperscaler capex spending has to come to an end, or at least be trimmed, and that could be a problem for the NVIDIAs of the world. So NVIDIA here having a deep pullback, but I would say that at the end of the day, this is a cash cow. This is a very strong company. So I'm just going to be curious to see whether after this initial bloodbath, we do get a little bit of consolidation. So where might we consolidate? As always, I'll be looking at I'll be looking at some levels just to see where the bulls need to step in. So at this point, just on the shorter term fib here, drawing this from the 5th of February, we're now at the 50% retracement. Okay, so that would be a nice level for the bulls to start pulling in. And certainly you've then got the 100-day EMA at about 183, and then down here at about 181 is the 61.8. I would say the line in the sand is down here between 181 and let's say that recent low there at 100, and let's call it about 179, 180. This is kind of the line in the sand. The bulls need to come in here and buy this dip and see it as value, and maybe consolidate for a few days, and maybe to try and sort of drag it a little bit higher. If the bulls cannot hold this zone, let's call it between I'm going to say 183 down to about 179. That's the key zone here. The bulls need to come in. If they can't hold that and consolidate and then gradually try and push it higher, NVIDIA, I think, is open, for a little bit more downside. Let's see. I'm not convinced it is going to have a huge amount more downside. This was a nasty blow yesterday. I expect it to kind of consolidate, as I say, around about this 180 level. Because at the end of the day, this is a quality company, and maybe it's just going to, instead of trading like a growth stock, it's going to start trading like a value stock. It's it's going to have solid performance, nothing crazy. The massive moves are over, but it's got to be an essential part of everyone's portfolio. The other thing I want to look at is just also Netflix. As I was saying yesterday, a beautiful technical sort of setup, and the fact that that was due for, this is again, it's a quality company with over I was at 320 million global subscribers. It was at a very low level. Let's just look at this. You can see here just how beaten down it'd be, and a lot of that was fears about buying Warner Brothers Discovery for a sort of 80-90 billion dollars, and the shareholders absolutely did not like that. And now we all know what happened yesterday. They basically said, hey, we're not going to challenge Paramount's offer, and we are sort of officially sort of withdrawing from the race. That means they won't be spending their 80-90 billion. Now, long term, the CEO of Netflix said that that actually would have added value to Netflix, but in the short to medium term, the shareholders hated taking on all of this extra debt and all of this extra burden. And so basically, they've been rewarded by withdrawing from that race. And you can see in the pre-market here up 10-15%, whatever. I was signaling yesterday. That was just like a beautiful technical breakout. So that's worked a bit quicker than I had thought. And again, early profit target, I would say just up here, you see this sort of fib retracement level to 38% at a minimum around about sort of 94, 95 bucks, which I marked yesterday. And you can see congestion there. So that's probably, and already we're fairly close to that. So it's going to be interesting today to see whether this continues to push higher or whether just the initial profit taking, maybe it's just going to consolidate a little bit. So let's just watch what happens in this gap over the day's trading. But I expect that to sort of carve out, some kind of base there, because Netflix is a quality company with excellent sort of cash flow, and of course it may be one of the beneficiaries in the AI, in the sense that AI is definitely changing filmmaking and the making of content and TV, making things a lot cheaper over the medium term. So that is, in theory, going to be beneficial to Netflix. So some interesting stuff happening in the individual stocks. Just very quickly, guys, just want to do a look around a couple of other markets. If we look here at the metals, gold and silver are consolidating quite nicely here. Pretty nice price action here by gold. Obviously, with the situation in Iran, the potential there for an outbreak, gold doesn't want to sell off too much. So it sort of came back, bought here, just hovering around. So that's relatively constructive. Silver, looking at the futures here, also pretty constructive, grinding up through some of these fib retracements levels. That is constructive. What I would say is not constructive is Bitcoin. Even with the risk off yesterday, we had US Treasuries up, we had the US dollar up, and we had gold and silver doing quite well. But BTC just failing again to hold any kind of bounce. And what I'm seeing here is that this is really a situation. If you actually look at all the ETFs, if you actually look at the break-even prices, in these levels in the 60,000. And it seems to me that what's happening is that a lot of people are underwater, especially retail, people who are not sort of long-term people, hodlers, this kind of, institutions. A lot of the retail people, their average sort of cost basis, they're actually underwater. And any little bounce, to me, seems to be sort of viewed as liquidity. It's simply saying, oh my God, thank God it bounced 5 or 10%. I can, get out close to my average cost basis for a small loss, or maybe even a break even. But the structural price action here is weak. This is very, very weak price action. As you can see here, any mini bounce is being whacked. Like boom, boom, boom. This is not good, even at lows. So I don't know. But as I say, we haven't made a new low at this point, so maybe this is just part of a painful basing process, which we may see price action. Something like something like this kind of price action where we it sort of does sort of a painful basing process, which eventually we get higher lows and we start to sort of to break out. It could be maybe this is what we're going to see over the next sort of month or two. Possibly, I don't know. Interesting. Finally, just want to have a look at the FX space. Interesting from the Chinese. They basically, let me just bring in. I just want to put up here the renminbi. Essentially, they made it easier to short the renminbi. So if we look at the renminbi here, the Chinese yuan against the US dollar, look at this. I mean, incredible strength being shown by the Chinese renminbi here, or weakness in the US dollar versus the Chinese currency here. And it looks as though the Chinese have said, okay, this is a bit, this is enough. And essentially, what they did yesterday was like a technical. They did two things. They made the fix. You know, the Chinese central bank. They fix the at about 9:30 p.m. our time every night the exchange rate for the renminbi, and it can only trade within a 2% band either side of that. So where they actually fix the opening price is kind of symbolically where they want the market to direct. And last night they fixed it very, very, very weak. So really indicating it was about 700 pips weaker than the average estimate. So that is essentially a very strong symbolic signal that the Chinese authorities have said, okay, this is getting a little crazy. US dollar is getting way too weak. It's hurting our exports. And secondly, they made it a lot more possible to short. Previously, to short the Chinese renminbi, you needed like a 20% kind of margin. They actually slashed that the risk reserve ratio. It's called the risk reserve ratio from 20% down to zero. So in simple terms, that's basically making it you needed less sort of margin, so to speak, to short the currency. So that's made it easier for sort of institutions and other players to actually to buy the US dollar and to short the currency. And you can see here we've had a little bit of a bounce. Now, whether this is just cosmetic and short-lived, who knows? Keep in mind that we have a big sort of meeting coming up for the Chinese Politburo, where they're going to sort of officially ratify their 5-year plan. That's happening starting next week. So maybe they just want a sort of bit of stabilization in the currency. I don't know, but that's definitely an interesting thing. And just finally, if you actually look at the Chinese renminbi versus the Japanese yen, JPY, oh, it's not found in stocks. No wonder. Yeah. So let's have a look at this. You can also see that the Japanese yen has weakened significantly since basically 2025 against the Chinese renminbi. Not exactly like the US, but still very, very weak. And that obviously is great for, especially in the East Asia sort of geographical jurisdiction. That's great for Japanese companies who are exporting. So that in many cases, they may be sort of competing with the Chinese. So the Chinese are not liking this. The fact that the US currency is strengthened and the fact that the Japanese yen is strengthened a lot against the Chinese renminbi. So it's probably time here, although this doesn't look good. This looks like a triple bottom here. So you know, maybe the Chinese have said, okay, this is getting crazy. Our currency is you know, getting a little overly strong here. It's not good for exporters. Okay, guys, I'll stop there. So again, what I'll be looking at today is obviously Nvidia. I want to be looking at that gap on Netflix and see if Netflix tries to come down and retest the gap or just sort of explodes a little bit higher. Also interesting to see just the reaction for XYZ and Block. This whole sort of debate about AI, and of course keep an eye on like the semiconductor index like SMH or SOXX versus you know, the pure sort of software plays. I think software plays might have a bounce, and also maybe sort of the equal weight you know, maybe doing better than, let's say, the Nasdaq or whatnot. And of course, let's keep an eye on oil and the geopolitical situation over in Iran. I'm also keeping an eye just finally on the Kospi because that's getting a lot of, you know, finally everyone's waking up about that, and it's just going absolutely parabolic. So let's just have a look and see if it's going to have a breather. Oh, interesting. It wasn't up 3 or 4% overnight. Disaster. Okay, so it's just kind of interesting. And there is an ETF for Korea, I think EWY. I'll just have to check that from my memory. EWY. Yeah, it's the South Korean ETF, which, as you can see, is essentially the Kospi, a very heavy market cap. You know, you got these Samsungs, SK Hynix are like 40% of the Kospi. So interesting. Let's keep an eye on this because this could be something where, you know, if it starts to blow off sort of parabolic top, there could be a little bit of a correction. Who knows? Maybe down to 131. That's definitely something I'll be looking at over the next. Actually, I'm going to be looking at that this morning. EWY. Because of you know, maybe this is an opportunity here for some kind of option play, a long put spread, maybe with a, you know, 2, 3, 4 week expiry could be interesting with a target down at maybe, you know, 140, 135, something like that could be quite interesting to look at. Okay, guys, I want to leave it there. Have a great trading day. Have a great weekend. And we'll be back. Actually, I'll probably be back over the weekend, maybe tomorrow on Sunday, with a bit of a broader sort of macro view where we do the sort of the weekly sort of macro outlook, monthly preview. Take care. Have a great day. Thank you.